This is the monthly chart on Teladoc, and after price broke out of this symmetrical triangle and formed monthly demand, price shot up all the way to roughly $300. However, we had a reversal pattern on the monthly chart. As you can see, this massive M pattern, which is a bearish reversal. Eventually, price came all the way back to retest the monthly demand at $79, but the momentum was too great. The monthly demand did not hold, and price continued to decline, reaching lows near $20. Before we continue the analysis, let's get into this article from the Motley Fool. Is Teladoc Health a buy now? Shares of America's largest virtual care provider, Teladoc Health, bounded higher following its announcement of second quarter earnings. The virtual care provider doesn't have earnings to report yet, but the enormous losses it reported last year shrank to a level that the market considers palatable. Since the passage of the Affordable Care Act in 2010, health systems are increasingly likely to earn more by producing positive long-term patient outcomes than they used to earn by simply performing as many services as possible. With its focus on whole person virtual care, using Teladoc looks like a relatively inexpensive way to improve long-term outcomes. Now, the huge losses Teladoc reported last year considered mostly of write-downs on its $18.5 billion acquisition of Livongo's chronic care operation in 2020. The acquisition didn't work out the way management intended, but the chronic care operation hasn't disappeared either. Today, more than a third of the company's chronic care members are enrolled in multiple programs. These chronic care programs are a key differentiator between Teladoc Health and a slew of related competitors offering virtual care services. Zooming out to a longer-term time frame is even less encouraging. Total trailing 12-month sales are up 192% over the past 3 years. Unfortunately, sales, marketing, and other operating expenses rose much faster. Now, here's Cathie Wood's take on Teladoc. She says, when we view stocks through the lens of AI, we look for three things. The first is domain expertise and visionary management. The second is key distribution. And the third, critical important, is proprietary data that can be used to train AI models to improve products and services, cut costs, and increase productivity. So here's her take on Teladoc. It has the best shot of becoming the backbone of healthcare information in the U.S. Since doctors on Teladoc have to see the electronic health records of patients, the company is gathering information at a rapid pace. In the future, Teladoc models could give doctors recommendations on the best course of treatment. All right, so let's start drilling down. We're going to go to the weekly chart. And what we can see, as I mentioned earlier on, you have buyers defending this $22 level. Not once, not twice, not 3 times, not 4 times, not 5 times, but a 6th time buyers defended this level. So the chart suggests the bottom is in, and we have seen the lows at $22. Prices are only $6 above this key support level, and could give you an opportunity to buy and go long if you believe in the long-term perspectives on the company and its business model with regards to virtual healthcare. All right, so let's kind of zoom out a bit and up. You know, the chart suggests price is going to have some difficulties getting through the 32.5 and 35 level, as you have selling pressure in the form of wicks. But I think your next key level is going to be this round hole psychological number of 40. So it's a matter of where can you get in to go long. Again, if you believe in the long-term perspectives of the company. Let's drill down to the daily chart. And what is positive is that on this recent move higher on earnings, price is now above the 200-day moving average, also above the 100-day, 50-day, 26 and 13-day moving average. So these moving averages that are converging and will probably start trending up will serve as dynamic resistance, further supporting that the bottom is in at $22. Will price fill this gap? It's possible, but again, you have these moving averages serving as dynamic support. So look for buy opportunities in this 26 to $24 level. Look for a short-term target at 32. Let's put this in green so we can differentiate the targets. Short-term target at 33 and with a medium target at 40. Put a stop below 21. So that'll give you a roughly 1-to-1, 2 to 3-to-1 reward risk ratio over the coming months through the rest of the year. Thanks for watching. Subscribe. Please like the video.